Welcome back to another week of What the F Happened. I'm joined with my partner in crime, Mr. Snaggy. What's up over there in Florida? You know, when we talk about the markets, if you look at what happened last week in light of the Fed raising rates 75 basis points, 0.75%, when the markets were expecting a 0.5% until a week before the announcement, that ripple effect for that interest rate increase set in and made it one of the worst weeks in market history for a very long period of time. That volatility, that kind of carnage will continue. Yesterday's little bump in the market is just some people trying to prop it up and see if they can't get out. Like a lot of times when you see that increase in light of a market going south or going to bear territory, you got to understand sometimes there's different influences that will prop a market up. Don't get caught up in that. That is a trap, and it will end badly. I get people all the time when there's like one or two up days in the market that they say, oh, is that the bottom? Should we buy back in? No, no, and no, unless you want to lose all of your money. If you buy back into that dip, that little bump in the market, game over. When you hear the news or the gurus on TV talking about them buying and this is a great opportunity and these stocks are posed as winners, you got to understand they're playing a different game than you. A game you will lose at unless you're a professional trader, you understand technical analysis, and you understand support and resistance to a very high level. If you don't, it's time to exit the kitchen. It's time to go into preservation mode, and that's what we're going to talk about on What the F Happened, how you preserve the money you have. We'll see you in a little bit. All right, we're back at it with What the F Happened, and we're going to talk about some things going on in the markets. You're seeing it in the news, but what is it that you need to prepare for? Stephen, what is going on with the rate increases? What are the areas you think that's going to hit the most?
Yeah, I mean, good morning, and a lot been going on the last week or two with rates and mortgage rates are increasing and bank rates are increasing and everything's kind of following, as the Fed increases rates overall, the bank lending rates. So it's going to start affecting, everything. We're already seeing that. So housing, obviously is going to be the most, kind of in the public view of everything. But behind the scenes, there's a lot going on as well with overnight lending and what the banks are doing and tighten restrictions. And all of that feeds into the flow of money. I mean, one of the reasons we've seen such prosperous stock market and just everything, prices rising on everything and the investment markets and everything over the last couple of years is because money has basically been free. I mean, it's been flowing, it's been printed, it's been spent, it's been given out, it's been thrown around in the trillions. I mean, so, all of that has just inflated everything, but that can't go on. We're seeing that because what's inflation doing? Just a couple of weeks ago, we had another 40-year high in inflation. And when you look at the wholesale inflation rate, the producer inflation rate, not the consumer, but the producer, which, is what drives the cost of goods, that's even much higher. So that tells us that, core inflation and consumer inflation is going to continue to rise, at least for the near future. So it's one of those things where it's all connected and it's all happening. So we need to be very careful what we're doing right now. And like you said, not fall into those traps. Yesterday is one of those traps where, last week there was a lot of short selling done by the hedge funds. A lot of that stuff drove the market to, like you said, the worst week in the last couple of years. And then, yesterday we see that bounce, and that's exactly what it is they're trying to sell off to get themselves, and that kind of raises prices. People are like, oh, it's time to get back in. We hit the bottom, but no. I mean, we just opened up right now this morning. Dow is down, over 400, the futures. It opened about 350 down, and it's starting to fluctuate a little right now. So we'll see, but just don't fall into those traps.
Yeah, and there's a lot of strategies you can do. I mean, a lot of people are really scared right now, and we're seeing it more and more. People, turn into deer in headlights in times like this where markets are falling. Most people don't even really realize the impact right now because they haven't gotten their statements. But at the end of this month, a lot of people are in for an awakening. When that statement shows up in the mail or when they go online and they pull up their most current statement, they're not going to like it. I mean, most people are going to be down between 20 and 32% That's the reality. Okay. Everybody that was touting index funds and indexed IULs and all this stuff, like, guess what? You're down. If you got an IUL, you're sitting at the floor right now. Okay. Which could be 0 or 0.7. And the cost of insurance and all the cost to run that contract didn't go away. So you are losing money officially, whether you like it or not. And there's some changes that are going to have to be made and some things that people are going to have to do here sooner than later. Because listen, no matter what you believe, no matter what you look at or what you study, I mean, we got a couple gurus on here, and I'll hit Mr. Where is he? I don't know where he went. Ryan and Drew from TikTok, who came on and said we don't know anything. That's his opinion. I guess Stephen and I know nothing about this stuff, but he's the expert. And you know why he's the expert? As he said, I'm the best. Made $5 million last year in crypto. Woo! Woo! You made $5 million when everybody was making money. I got a challenge for Mr. Guru here. Keep it, motherfucker. Keep it. Let's see if you can pull that one off. But that's the problem. One of the things that is the biggest thing that hurts people when it comes to their wealth and their money is greed, or what I always like to call looking in the rearview mirror. One of the hardest things to do is actually do what you should do logically. And a lot of people hang on to past returns. So this guy, maybe he did make 5 million. Maybe he's just lying. Who knows? It doesn't really matter. But let's err on the side of optimism and say he did make $5 million. So he made $5 million when crypto was going up. So he obviously knows a thing or two about crypto, which good. He probably knows far more than we do about crypto. But the problem is when you get caught in that rut of looking at past returns, what happens almost 99.9% of the times you give all those returns back. Think about a casino. You go to a casino and you see these people all the time. They're on a winning streak. Do they just say, nope, hey, everybody, have a good evening, leave their drink there, go over to the cage, cash out, take all their money, and go home and not come back? Is that what they do? No. They're on a winning streak. So what do? They keep thinking they're going to keep winning because they're looking in the rearview mirror, and they end up what? Losing it all. But it's okay because the casino gives them a couple free nights to come back and lose even more. The stock market is identical. It will always lead you to do more and put more in. They want all your money in on the boat before they sink it. And they do that by always touting past returns. Average rate of return. Mutual fund companies are notorious for this. When I was in Wall Street, when I was a financial advisor, all we ever talked about was past performance. Well, look at the prospectus or look at these fact sheets. In the last 5 years, this fund has made 20%. But when you actually boil it down and you look at the actual return, not the average return, it's not what you think. A lot of times you would have made nothing. It's why if you really study the Magellan Fund, okay, which is a Fidelity fund, it was managed by, some would say, one of the greatest fund managers of all times. Look it up, Fidelity Magellan Fund. It's closed today, I believe. Maybe they reopened it, but it's been closed for a long time. This fund had returns that beat the indexes almost every time. But when you really look at client performance and how clients did in Magellan, most of them lost money. It wasn't because the fund underperformed. It wasn't because the fund didn't do well. It was because every time the fund had a down period of time, like right now, the fund would have been down. Every time when it was down, people exited and they cashed in their chips when they were down. They didn't wait it out. If they had, they might have had better returns, but that's investor sentiment. When you look in the rearview mirror and you allow past performance to justify future expectations, you lose every time. And that's what we've been warning for, and that's what we've been talking about, and that's what the market's showing you right now. Danger, danger, danger. Warning, warning, warning. The signs are very clear right now. I mean, we've been talking about this, Stephen and I, for far too long. When the warning signs weren't maybe as prevalent as they are now. Maybe the warning signs weren't even out when we've been talking about this. But the people that took the advice, the people that actually acted on it and did something, because knowledge is useless without action. You got to take action on some knowledge. And listen, this might be useless knowledge for gurus like that say they made $5 million. But if he made $5 million last year, I'd love to know how much of that he kept. If he kept a lot of it because he cashed in his chips, maybe he's smarter than most, okay? And good for him. Then maybe we should have him on, and he can teach us a thing or two. But I very much doubt that's the case. People love to talk about their winnings. They hate talking about their losses. So I urge all of you, like with this in today's show of what the F happened, we really, really need to stop looking at what happened in the past. Because what happened prior to today is gone. It's never coming back. Okay. It was one of the longest bull runs in history, and it's over. Don't take my word for it. Take the Fed's actions word for it, because they're going to raise rates. They just did a 0.75 of a point increase, which we're going to talk real estate. We're going to talk mortgages in just a second. But that increase signifies where we're going in the future right there. Powell tells Congress the Fed is strongly committed. I want you to really look behind the curtains on that one.
This just came out 5 minutes ago, Chris, just so you know.
5 minutes ago, Powell tells Congress the Fed, okay, and the Fed and the U.S. government are different. You know that, right? The Fed is its own thing. Read Creature from Jekyll Island. You'll understand it. The Fed is strongly committed to bringing inflation down. So in other words, let me dictate that and explain that in a fifth grade level. The Fed will do anything that it requires to bring inflation down. Now, that's the frontline story. That means they will crash the economy. Mark my word, that's what they're going to do, which means they will crash the stock market, which the stock market will go before the economy goes. But you're already seeing weaknesses, layoffs. You're seeing companies reporting future projections that are lower than they are today, expectations. But Stephen, what else is in here that's important to talk about? I mean, inflation is running too hot. Duh. What else do we have?
I mean, their immediate goal, they keep saying they want to get it down to 2%. I mean, whew.
So does everybody understand that? They want to bring inflation down to 2%. We're sitting about 8.5, 8.6. The new CPI numbers haven't come out in the core CPI, but they want to bring it to 2. So what you got to ask yourself is, if we're going to go from 8.5 to 2, what's that require? I don't really know. We just got done out in Palm Beach. Stephen and I and a couple of our other team members were out there listening to an economist, and he said it's going to take 6. It's going to take 6. Okay. That means the Fed is going to have to raise interest rates. That's Fed fund rates, not your 30-year mortgage rates. Fed fund rates to 6. That's what he was saying. All I can tell you is, if they raise the Fed funds rate to 6, it's game over. But it'll be game over if they raise it to 3. It'll be game over if they raise it to 3.5. Me and Stephen, I think we talked at that meeting. We think the number's more like 3.5. But the economist said they're thinking maybe 6. It is game over.
The problem, Chris, is they're trying to play so much catch up right now. Like just 6 months ago, they were telling it's all transitory. It's nothing to worry about. There's no problem. Every one of us saw what was happening and understood that, what was going on. But for some reason, they just wanted, and so now they're saying, oh, yeah, now we got to tighten and it's very important to us and all this. It's like, well, where were you when it counted? Where were you before, all this? Why weren't you doing this a year ago? Like, it's so frustrating,
It really is. And it's interesting. On TikTok, Tick Trend said crash. What do you mean? It's already crashing. And he's absolutely correct. He or she's absolutely correct. Down here, Grammy Elizabeth, I love this one. It's Jimmy Carter 2.0. Like, I mean, come on. It was probably pretty darn accurate right there. The Fed waited too long. Yellen coming on saying, oh, this is transitory. It's just going to pass. There was so much going on because, hey, listen, when you're drinking the Kool-Aid and the economy's running hot and you're getting unemployment back from the pandemic, everything, they're just pushing that needle, right? They're pushing it. It's like a car engine. You're running it at a red line. And then all of a sudden you're like, whoa, we overshot. And they didn't act fast enough. They kept the rates too low. They kept the easy money too easy for too long. Japan did the same thing, and they never came out of it. I hope the United States can. This is a strong economy, one of the greatest economies in the world. So I'm confident and optimistic thinking it can. But the Fed acted too late. So now the Fed has to take drastic measures, just like he showed right there in that article. And they will. And those drastic measures don't just mean they're going to raise interest rates a lot. I wouldn't be surprised if July, they don't raise interest rates another 0.75 of a point. And that's going to be catastrophic. That means to buy a house at today's housing pricing is going to be a thing of the past. People are not going to be able to afford houses. So I got some good news for any of you that are landlords. If you've got some vacancies, it's giddy up time, because those vacancies are going to go quick and they're going to go at a really high amount. One of the things that we talk about a lot when we're talking about CPI is housing, the cost of housing. Okay. Rents have gone up. Certain parts of the country have seen a 50% increase in rents. The average across the board is 15%. Think about that. The average is 15%. Certain parts of the country, like Texas, are 50%. So in other words, Your lease is coming up for your apartment you live in. You're paying $1,500 and now it's $3,000. Game over. You're like, you can't afford that. So what are you going to do? You're going to go try to find another apartment. You're going to have to take a step down in your lifestyle, and good luck finding one. There just isn't enough inventory for the housing need when it comes to apartments, because when people can't buy housing, and I believe the average house price is close to $400,000 nationwide, when people can't afford that because the interest rate went higher, and when the interest rate goes higher, it reduces the amount people can take a mortgage for. It's just mathematics, folks. And when that happens, you now are going to tilt that pendulum to now all this demand. The demand doesn't matter anymore because they can't afford it. So one of two things has to happen. The price of the inventory of housing on the market is going to come down to meet the demand's needs, because they can't afford the pricing today. So the price of the housing is going to come down. That's unlikely to happen anytime in the near future. So what that means is people aren't going to be able to afford housing. There's going to be a massive, massive run on the vacancies and the apartments that are out there. The builders can't build apartments fast enough, and your rents are going to be through the roof. I mean, we used to look at New York City and be like, how does anyone afford rent there? Well, what New York City used to pay is what everybody's paying now. It's a problem, folks.
And Chris, on the other flip side, what else we see happening right now because of that high prices and the mortgage rates on fixed mortgages jumping up is we're starting to see a huge demand for adjustable rate mortgages as they've surged, as interest rates make biggest jump in 13 years. So mortgage applications to purchase a home rose 8% last week compared with the previous week, bolstered in part by the demand for adjustable rate mortgages. A big jump in mortgage rates may have actually spurred home buyer demand, perhaps as consumers worried rates would move even higher. So people are expecting them to keep going up. The average loan size at just over 420 is well below its 460 peak earlier this year, and is potentially a sign that home price growth is moderating. And the thing to note in here, though, is this right here. So mortgage applications to purchase a home rose 8% last week. However, applications were 10% lower than this same week last year. So we're down year over year, but we're up week over week because people are starting to look at these adjustable rate mortgages. Now, what's the challenge with adjustable rate mortgages? We saw this in 08, where a lot of people were going out there, buying these very low rates, expecting they could refinance into a fixed rate in 5 years, but then the market crashed. They weren't able to refi, and we saw the big foreclosure. That's one of the reasons that fed into the 08 collapse, one of many reasons. But at the end of the day right here, I saw something earlier, somebody posted online and said, marry the house, date the rate. Meaning, if you find a house you love, use an adjustable rate to get something affordable now. And then the thought is, like you've been talking about bonds, Chris, with treasuries, as rates go up right now and the economy crashes and we enter a recession, the Fed's going to have to then completely drop rates again. And they're saying, get the adjustable now low. And then once the Fed does drop rates again in the next couple of years, when we have all this economic turmoil, then go ahead and refinance at that point and lock in. But we're kind of getting back into this 08 feel where people are doing this more risky stuff to try and keep up with the market, not knowing what the future is. Because again, what if you do an adjustable rate now, we see a housing market decline pretty heavy, which could happen. Then you can't refinance into a new mortgage. And then what do? Your adjustable rates going up, going down? Like, what's happening? And how long does this happen? I mean, does the Fed, is it going to take 5 yeyears? Is it going to take, are they going to drop them again next year? Like, who knows? So it's a lot of risk going on.
Yeah. And anybody that's just joining us, I want to introduce you to the other party that joins us on these shows. His name is Cash. We call him Lazy Cash. It is our shop cat. He lives here at the offices, has 8,000 square foot to his disposal to run around and be a terror. And he just likes being part of every show. So I just wanted to call it out and see if you guys want to say hello to Mr. Lazy Cash. But that, let's get back into that, Stephen. That's a really important thing, is adjustable rate mortgages. We all know that was one of the big things that hurt people in the Great Recession of 2008, 9, 10, was adjustable rate mortgages, because a lot of those people lost their houses because they got into something they technically couldn't afford, but because of the way the mortgage worked, they could at the time, and they just thought the pricing was going to keep going up, so they'd exit. So if you were to use adjustable rate mortgages, which is going to become a thing, listen, folks, if you don't think that's going to become popular. It is, because that's going to be the only way people can buy houses here.
Chris,
soon.
on that real fast, let me just add to it real quick and then you can keep going. But
sure.
As recently as March, a 30-year fixed mortgage looked like a very good deal. The average interest rate was under 4%, even though inflation was more than twice that. That divergence couldn't last forever, and it didn't. Just last week, mortgage rates surged by more than a half a percentage point, finishing at 5.78%. That's the biggest single week increase in more than 3 decades, and it is going to push the housing market into uncharted territory. Buyers, sellers, and the Federal Reserve are all going to have to learn to navigate this new strange landscape, and that's exactly what we're seeing right now. Like, people are looking for other options. So go ahead.
Yeah, let me transition here real quick. A couple questions came in. Someone on TikTok just said, it's Michael T239 said, looking to become my own bank. Can you help? Absolutely. So listen, I just want to take just 2 seconds and say 2 things. Every single Wednesday, we do a free webinar. Okay. It's totally free. You go to chrisnaugle.com. Just, you can see the spelling. I finally changed my name. Andrew had, hijacked my Zoom and had his name on there, but that's the website. You just go there and you just scroll down 2 index fingers and you register for the free, I keep saying free wealth webinar. It's every Wednesday at 1 p.m. Eastern. And today, what we're going to be talking about is BYOB, be your own bank, but we're going to be talking about how you can be your own bank using your qualified retirement plans. This is going to be very important, because as this recessionary period happens, we're not in a recession now, but we will be. I wouldn't be surprised that if after this quarter, we're really close, if not technically in a recession. And when that happens, companies will scale back. They will lay people off. People will lose their jobs. And when they lose their jobs, their money will stay there in the 401k because they don't know what to do. So we're going to show you how to take that money and make that money go to work for you in a very safe, conservative way. Actually, the BYOB, if you did it the right way, would be guaranteed. So for that person that was asking that, join us today at 1 p.m. If you can't join us at 1, we record them all and we put them up on Money School TV. It's a YouTube channel that we created for all of our lives, or you can go to my YouTube channel at The Chris Naugle and you just subscribe to the page. We put all that up. And lastly, on my website, chrisnaugle.com, there's a 90-minute video. Now, you're probably thinking, I don't have 90 minutes. I said the same thing. You really need to spend 90 minutes watching this video. I'm going to make a promise to you, a certified promise. If you watch that 90-minute video and you apply that knowledge of what you learn in that 90-minute video on chrisnaugle.com, it will, I guarantee you, change your financial future if you apply that knowledge. It changed mine and over 5,000 of our clients' financial futures, and it will change yours. But you got to spend 90 minutes. That's all there is. So let's get back into it. I didn't mean to divert from what we're talking about, but that's a good question, because in these times, I'll tell you something right now. When everybody loses faith in the stock market, which is quickly happening, when everybody loses faith in crypto and Bitcoin, the smart ones are probably buying crypto, but I wouldn't be surprised if Bitcoin doesn't touch 14, maybe even 10,000. We're sitting at about 20. We'll fall from there. I just bought the other day and I'll continue buying down because I do think it will bounce back up, but it's going to take some time. Bitcoin is all about investor confidence. There is zero intrinsic value on any type of crypto at all, which means it is solely reliant on your and everybody else's investor confidence in it. But I don't think it's going to go to zero. Okay. I think you're going to have a big setback. It's going to create a huge opportunity, and then you can ride the wave up. But the thing I'm trying to say is so much of what you're seeing in the markets is all investor confidence. The longest bull run in history. Think about that. Millennials know nothing but making money. Most millennials. I mean, early millennials maybe kind of remember some of 08, but most millennials only know making money in the markets. The market has never disappointed them. It has never not made them money. Crypto has never not made them money if they just bought it and held on to it until now. Investor confidence is deteriorating, and it will deteriorate even more. And when it does, people will be looking and seeking alternative solutions. And that's alternative solution. The almighty word will be called guaranteed. And guess what? There's really only 2 places you're going to get a guarantee. And number one is giant mutually owned insurance companies and the specially designed and engineered whole lives that we do for the infinite banking concept. That's guarantee number one. Or it's a guarantee, but it's more just the full faith and credit of the U.S. government. You could buy U.S. treasuries like I've been doing and talking about. U.S. treasuries are like a play that will mature in a year or 2 years. You'll lose money the whole time. I'm just warning you. As interest rates go up, the price of the bonds will go down and you will lose money. But it's not about that, because when the whole thing collapses and the Fed actually comes off of this, when the Fed gets on top of inflation and they get inflation under control, I want you to understand this. The Fed will do nothing until they have inflation where they want it. Their target is 2. They'll probably settle it around 3. But when they get it there, they will have succeeded in crashing the stock market. Bitcoin will follow the stock market, or the stock market will follow Bitcoin, whichever side of the fence you're on there. The economy will be suffering terribly. Companies will have laid people off, went out of business. I'm just painting the picture of what's coming, folks. This isn't speculation anymore. It's coming. We're already in it. Okay. So when that all happens, I hope to God some of you made the pivot and found safe places for your money. And if you're the wealthy, you already know what that is. Your money has always been in these private banking policies, which are specially designed and engineered whole lives. Look around. All of the wealthy use it. Our sitting president, factually, look it up. How did he fund his political campaign? Same thing with McCain before he passed. Whole life insurance. But it's not the whole life you buy from your broke-ass brother-in-law. It's the whole life that's designed for a completely different thing than what you in your life have been taught whole life is used for. It's no longer used as a life insurance contract as a primary. It's used as a banking system, and it is guaranteed. So I'm going to get off that, but listen, some people hate that word, and I understand. It's been bastardized for decades. But if you go back to people in the Great Depression and the people we talked to yesterday, and you look at how that one stupid vehicle has saved so many families from financial distress, including Walt Disney, including Ray Kroc. You remember the movie Founder with McDonald's? Yeah. How did he take McDonald's from a hamburger shop to a real estate company? That's it. Loans from his life insurance, his whole life insurance. Be very clear. So I didn't mean to go there, but folks, listen, what I just told you, you might not believe it right now, but you're going to start hearing more about it, because we're running out of places to put money. There is no other safe place to store your money right now, in my opinion, outside of giant mutually owned insurance companies and U.S. Treasuries, if you still believe in the full faith and credit of the U.S. government, which
Chris,
I do.
I've been informed by several people online here recently that crypto is guaranteed to go sky high here very soon. So I don't know what you're talking
really?
about.
They're going to go to jail using that word in crypto in the same sentence.
I just still can't get over the crypto thing.
I don't understand how they can even make that statement. I'm sure my guy who said we know nothing is saying that to all of his people. I guarantee you Bitcoin and crypto is going to go to the moon. Well, just look at history, and that won't be the case. I do have faith in Bitcoin. I truly do, and Ethereum as well, and maybe a couple others. But I don't sit there and preach it. I don't sit there and talk about it. I don't know enough about it, to be honest. I've read a couple books. We have a great mentor, Spencer Montgomery, who teaches at all of our trainings. And I look to him for advice. I really do. So let's see. I'm just going to hit a couple of these. So I have $450,000 in a 401k, 2 to 3% guarantee, not in stocks now. Should I go all in and ride the stock wave up? See right there, that is lit a day of terror. I think I got that right. So this is from TikTok. So this is the trap that we were talking about earlier. I think this person's coming in a bit late. They have 450 grand. It's sitting in probably stable value in their 401k, which is a really smart play. I hope they got out earlier versus later. They're making 2 to 3%, which, by all intents and purposes, if you're making 2 or 3%, you're thinking, holy shit, that's not good because inflation's 8.5. But inflation won't last. Okay. Inflation's a temporary thing, but it could last a year, 2 years, but it's still temporary. Making 2 to 3% guarantee is definitely the play right now. But this person's saying, should I go all in? In other words, should I take all my money from stable value and put it all into the market? Now, that's a logical way of thinking, because you're looking at the markets and you're like, markets are down. But the markets aren't down even half of where they're going to go. The markets will go probably double digits or double what they are now down. So if you went all in right now, I hope you got some brass cojones, if you will, and some balls of steel, because it's going to be a rough ride. I would not go all in. Here's what I would suggest is maybe start dollar cost averaging in. Small little amounts of that 450 that's in stable value. Every month, move a little bit into the markets. Pick whatever funds in your 401k that you like, like, and understand. Maybe like, and understand the indexes. You can grasp that. Great. So pick a couple of indexes in the 401k and start dollar cost averaging down. But understand, you're going to continue to lose on those. I always tell people sitting in stable value right now probably is a really smart play. And I would stay there. I don't even know if I would dollar cost average any of that 450. Only money I would dollar cost average into the market is your new money you're putting into your 401k up to the match. I hope that helps, but I think now is too early. It's a trap. We are not at the bottom, okay? Not even close. We will never know what the bottom is. You can never call the top and you can never call the bottom because you can't time the market. End of story. The best in the world, the Ray Dalios, the Warren Buffetts cannot and will not ever attempt to call or time the market. But you can predict trends, and that's what they do really well.
Here's one thing to look at, Chris, right? I mean, we look at, okay, you know, we're up at 37,000 at the high. We're down right now to about 30,000. So people are seeing this and they're like, okay, let's get in. Like, it's time to get back in, but let's take a step back. Okay. 1 year. Okay. Yeah. Okay. We're kind of up and we're good. We're down. So it might be a good time but let's take a step back. Let's take
You're not even close. I mean, and
look at
just,
this.
Stephen, let me just kind of talk to TikTok and Instagram because they can't see the screen. He's got the Dow Jones up, right? So we were looking at year to date. It looks like we're really low on year to date. If you're looking at a 1 year, it looks like you're really low. So logically, that person was saying, should I go all in? It kind of makes sense if you just look at a 1 year chart or if you listen to some of the gurus that have something to gain. But when you take it and you go, where were you? 2 years out? Even 2 years out, folks, listen, like where the market's at now, it has the ability to go down. This is just the Dow Jones. So if you're at 32 or 30 where it opened, what is that over there? Yeah, you got a long way to lose. And that's just a 2 year chart. Keep going, Stephen. Like, why don't we do a 10 year? Because that's where we're going, folks.
Remember, 10 years is not a long time in the grand scheme of things.
No,
10
it's
years
not.
is a blip.
And based on what we're seeing here, the numbers you need to look at, folks, and just write this down. This is very important. And listen, like that guy said, he's the best. I'm not the best, but I know what I'm doing here. I will tell you that the numbers you need to be focusing on for the Dow Jones or the S&P or any of the indexes are 2008 and 2011 numbers. You want to see where we might stop, where it might be a little resting place. We could go lower, but where a really strong resting place would be, you would have to look at the numbers of where we were at on the indexes during 2008, 9, 10. You can look at that range. Where was it? And then also look at 2011. Okay, the Euro crisis. That's when Greece was going bankrupt and all that stuff. Those are the good stopping places because after that, you don't want to know where the stopping place is. If we go below that, if we break that floor, holy shit, folks, it's not going to be good. You literally have the potential in this crash. And somebody asked when it's coming. I don't know. Okay. The Fed is going to do a pretty good job of escalating when it's going to happen with their actions because now they're selling off about $95 billion a month. That just started, but they're not doing 95 yet. They're selling it off, meaning they're liquidating bonds and maturing bonds into the open markets, which is sucking liquidity out. That is going to steamroll how fast this recession is going to happen. But what Stephen just pulled up, I mean, that's like very important that you understand that because knowing the levels, knowing where the floors and the ceilings are, will give you a really good look at where we're going in the future because we are officially in bear market territory. What does that mean? We're going down, folks. The ship has sprung a leak and we're on our way down. And if any of you know how ships sink, first slow, but then they fill up and there's a breaking point and then it goes really quick. Same with dominoes. This is how the markets work. We're going to hit certain triggers and then it's going to go very fast because there's nothing to stop it. So I hope to God we stop around 2011 or even 2008, because if we don't, the number, and you guys aren't going to like this, is about half, a little less than half of where we're at today. I just want to put things in perspective, folks. I'm not calling that that's where we're going to go, but that's where we have the potential to go. And I don't care how long of a time frame or how long of a duration you're looking at for you, and you're like, I can wait this out. I'm going to ride this out. None of you, I don't care if you're 19 years old, none of you want to ride that out. I promise you, because it will take you the next 10 years of your life just to get back to where you are today. Think about that. Do you want to give up 10 years of your life? Be my guest. I'm not playing the game. I'm not. What we do and what we teach at the Wealth Webinar or a 3-day event that we're doing at the end of July, like what we do is teach you how not to have to give up 10 years of your life, how not to be in financial ruins. And listen, folks, like I know this is doom and gloom shit, but this is real. Like, don't take my word for it. Look at the news, the articles, every one of them are telling you, are painting a picture of what's to come. And then you just go back in history and you just look at where we've been. Where we've been gives you a really good clue of where we're going. The difficult part is when. Everybody wants to know when. Tough. I don't know. Well, you don't know anything. As that one guy said, you don't know anything. Why? Because I can't tell you when. Well, you know what? No one can. No one can time the market. You can time the trend. You can participate, or you can understand the duration of in the trend of where we're going to go, but we can't tell you when it's going to happen or how severe it's going to be. You can get close though, and it's already begun. The storm's already here. When you look outside and you see the sun, don't think, oh, everything's good. The storm's upon us, and it's going to continue to deteriorate and get worse and worse. The Fed promises they will make sure they destroy the stock market. Why? It's not really because they want to. It's because they have to. They have made a commitment to get inflation under control because they fucked it up. Right, Stephen? That's the simplest thing to look at here. Why are we in this predicament? Well, because they printed too much money, which drove too much inflation. They made easy money too easy for too long at low interest rates. And then you throw $5.1 trillion. And that's not even the whole story. Okay? That's not even the whole stimulus. There's two types, and we'll just talk about the ones that landed in your pocket and the ones that landed in the Wall Street pocket, increased assets. They're going to take that back. It's already begun. And then they're going to make it really difficult for you to get new money. They're going to freeze and seize the banks up, because this is what's happened in past. The banks will seize up. Right now, you might be able to get a car loan and a mortgage, but in a year from now, it might literally be like getting money out of a stone. Banks aren't going to have the money to lend like they do today. Banks will, in the future, in a year or something, only want to lend to people that don't need their money. That's how banks are now, right? Credit cards only want to give money to people that don't need credit cards. They don't want people that need a credit card to have a credit card. They want people that don't need a credit card to have a credit card. And they do a good job. They send you all those checks, right? How many of you get those checks in the mail? You got your credit card. You're really good about paying your bills and everything, and they love you, and you're not using all of your credit cards. So what do? They give you checks. Why? Because you don't need them. Folks, this is where we're going. When you look at what now, what's next, one of our shows we do on YouTube where we talk about this, where we're going, what's next is not going to look good. It's going to be very difficult for a lot of you. So the best thing you can do is prepare, get ready, plan. It's the only thing you can do. Stephen, let's hit some of these questions because we got lots of them coming over.
Yeah, while you do that, I just want to correct one headline real fast. So I just saw this pop up. Jim Cramer says younger people have to learn to be more frugal and watch those $14 margaritas. Well, I'll correct that and say younger people that listen to Jim Cramer's advice have to learn to be more frugal because they're.
I love that. That's the best correction you've ever done, Stephen.
That's all. Go ahead. Let's do questions.
Oh, yes. So let's see. So Alexander coming in from Facebook said, let's see. We'll tune in for a second. Still here. Got questions. No talk of shorts. Oh, so Alexander's talking about shorting the market. You can short the market with options by using puts, different strategies. You could literally just buy an inverse ETF or many other mutual funds or ETFs that actually play the downside. You could actually even do the VIX. I've held a position in the VIX for a long time. Now would be a good time to look at the VIX. It's the volatility index. So Alexander's saying, why not play shorts? And the reason we don't talk about it, Alexander, is just because a lot of people don't understand it. And a lot of people don't want to understand it. So it's dangerous because if people just start shorting the market, chances are they're going to lose. We have to identify the trend. And the trend has to be solidly identified as going down. Because just look at, if you were shorting the market, if you bought a put on the SPX, right? Let's just say you did that. Or the S&P 500, we'll just leave it at that. You bought a put on that, and the market did what it did yesterday. That would be catastrophic for your short position. But if you are shorting like a blind short on the markets, it's just a dangerous thing. You can make a ton of money, and if you know what you're doing, Alexander, by all means, man, this is your moment. But you got to know what you're doing. So we typically don't talk about it because it's almost like leading someone down a path, and they're not going to know how to navigate that.
Well, we talk about it in our advanced trainings. I mean, we have a whole stock trading course and program and weekly ongoing trades. I mean, she shares stuff every day, right? So we do, just not on our general channels like this.
Yeah, exactly. So we've got a training coming up, a really good live one, or you can attend virtually. It's July 30th and 31st. We have a VIP event going on the 29th. So July 30th and 31st, we're going to be going into all of this stuff in depth. We're going to really go deep into what to do to get ready. Because on these shows, we really just talk about the news and what's happening. So we don't really get into tactical stuff, but in our trainings, you do. Now that event is a paid event. The Wealth webinar is a free event. So you can pick which one, but the live event is going to be very tactical in what we're teaching and how we're doing it. Matthew coming in from Facebook as well said, If we have a red wave at midterm, so he's talking politics here, how do you think this will affect inflation in the markets? Well, it got us where we're at now, so you can project where we're going to go there.
Well,
But even if you get the blue wave, I don't know. Right now, we're too far gone. So
no, Chris, it's definitely going to help because it's going to stop all the spending and all the policy that's driving all this inflation right now. It's going to stop it from being able to happen because Biden's going to want to do all this stuff, and it's already being fought back against because even Democrats don't even believe in half the shit's going to do anything. So it's already happening, but it's just going to put a freeze on any further damage that can be done until we can get another president there that actually knows what he's doing.
Yeah, and it's like, we're so in this world that we live in of, like, it's one side or the other. But like, listen, there's problems on both sides, blue or red. But the problem right now is we've got a leader that does nothing but blame and solves no problems at all. For some reason, the leader is a puppet that is being puppeteered by somebody that has an agenda, and that agenda isn't in your favor. And that's all I have to say about that. I mean, we don't play politics here at Money School or on what the F. But like, I think at this point, the red wave, I think they've taken the masks off and the blinders off. I don't mean the mask for pandemic, but they're still wearing those. But they're just blind to the truth. Like, and I think they're starting to see, holy shit, look at the gas price. But then they're blaming that on Russia, which I guess you could make a point. Like the Russia-Ukraine war has something to do with gas, but it's not the whole story. But then the food and everything else, inflation and all the things that are going on are largely because of policies and things that have happened under this administration. Yeah, but it doesn't matter. You need a strong leader that is going to stop blaming and going to start actually fixing things. And we've had lots of strong leaders, depending on who you look at in the past, there's lots of strong leaders that we've had on both sides. There really is on both sides. But this administration, well, if they stay in, like, good luck. Like, it's going to be a lot worse. That's, I guess, the best news I could say. So Eddie28SP said, you sound like you have an agenda. Well, I guess I do have an agenda, and that's to save you from financial collapse. So if that agenda doesn't fit your agenda, bye. I guess that's all I'd say. Let's see. Doesn't matter about midterms, same club.
Tell them we'll send them a refund.
Yeah, we'll give you a refund for today's time that you spent here. The refund is free. How about that? So anyway, Get Real About It. Get Real About It's been on here a bunch of times. He said, doesn't matter, same club. Eddie said, you sound like you have an agenda. I had another one here I'm trying to find. It was a really good question that came in. Game is rigged. Yes, it is. Central bank digital currency is coming. That's the one. So Get Real About It. So, one of the other things it's been talked about, I've listened to a lot of very high-powered hedge fund managers and economists talk about, the U.S. digital currency. Now, take Bitcoin aside and Ethereum; those are all private. That's different. The U.S. government, just like China and all other governments, will eventually adopt a digital currency. That digital currency will not be decentralized. The digital currency will put them in even more control over what you can and cannot do with your money. Because money is nothing more than a means of exchange. Money for food, food for money, money for car for money, so on and so forth. They will control all of that with the digital currency. Right now, the paper money, they control the supply of it, okay? They control the value of it through printing because that's what inflation is. It's a devaluing of money. But the digital, Stephen just put it up, Investopedia, central bank digital currency. It's all out there, CBDC, just like our friend here on TikTok said, what is it? Well, it's already in the works. It's not real yet, but it's as real as it's going to get, and it's going to be part of it. And unfortunately, when it happens, you're not going to have a choice. Like, you're really going to have to either go underground and find a way to barter, or you're going to have to adopt the digital currency because that's just the way it works. We live in this country, the United States of America. Whatever they determine the currency is, whatever they determine money is, right now it's the U.S. dollar. The Fed's most prized possession. But the U.S. currency could change to a digital currency, and in that, you'll have no choice. But listen, they've been doing a great job of getting you to drink from the I don't want to say it wrong in there, but they've done a good job of training you how to use digital currency. Think about it. How many of you actually pay cash for things still? You don't. You use a credit card, don't you? Use a debit card, don't you? Most things that you buy, exchange, or do are done digitally already. We've been conditioned to already be in a digital world. So when they come up with a U.S. digital currency, all it's going to be is the same old, but it's going to give them more control over what control you have over your money. And that won't change until you learn how to take back control, folks. And that's the agenda here. You want to back to that person that said, I have an agenda. I do.
Here's the agenda, Chris.
Thank you.
So,
Tell me the
it's all
agenda.
about control. Look at this. Chinese banks freeze billions in deposits. Officials use health QR code to bar protesters. So these banks literally, I read this article the other day, but depositors have been cut off for at least 39 billion won, $6 billion in the, according to the state-run magazine. And what they're doing is they're people that are there, they're saying that they have a bad QR code, that they have COVID essentially, and they're not allowed to be there as the reason to keep them away from the banks and not letting them protest to try and get their money. So if there was no banks and money for them to go get, and they could just freeze a digital currency from your phone or wherever you get it from, then they don't even have to deal with any of this. So it's all power and control.
It is. Someone on TikTok said, why specifically is the Biden administration responsible for gas price hike? I don't believe we said that they were. I said, you could definitely point the finger at Russia-Ukraine war because of supply.
Oh, I could tell you 10 reasons why they're responsible.
And I can hit some of them too, So I guess the first question is, would you vote for, my question to somebody that put a question like that is, would you vote for Biden again? That'd be the first thing. Forget about who's running, but let's just assume that it's not Trump. Like, would you vote for Biden again based on what he's done to help this country? That would be the first question I'd ask you. And if you said yes, then I'd just dismiss it. But there are a lot of reasons why this administration is responsible for gas increases. Okay, but a lot of the gas price increase, okay, is responsibility of supply. Like we now have things that the government made it so we're not buying anything from Russia. But Russia didn't supply a whole lot of the oil to us. So that's not the Russia-Ukraine thing that Biden, I'm just going to call him out, likes to just say the increase in gas prices is solely the responsibility of the Russia-Ukraine war. That is a fucking lie. That is not the truth. Stephen, you want to hit on that a little bit?
No, not really, because it just makes me mad.
I know.
I don't see how somebody can see that with their own eyes, what's going on, and say, oh, it's not his fault. Like, what the fuck are you talking about?
Yeah. There's just so much to it. But again, this isn't about politics. Okay. Right. A lot of people want to call it politics because we live in a divided country that will eventually probably result in a civil war in one way or the other. But it's about you, folks. Forget about Biden or Trump or Democrats or Republicans or black or white or God, who vaxxed or unvaxxed. Like, it's always one or the other. We are all the same. We live in a country and we live here because of freedom. And a lot of people have died to provide that freedom. So, like, forget the bullshit. Get out of the politics side. Does it make a difference? Absolutely. Like, but really it comes down to you. This show, the Wealth Webinar, our 3-day events, all the YouTube stuff, you know what it's about? Not Biden, not Trump. It's about you. Pull your head out of the fucking sand and wake up and start taking responsibility for you and your actions and your financial future. Because you know what? I'll tell you something. Your kids will want to know why you failed them. Your kids will want to know why you have to move into a smaller apartment or a smaller house. Your kids will want to know why you lost your house. That's on you. The cavalry isn't coming to save your ass. You are the only one left standing. So wake up, smell the roses, and get to fucking work fixing your money problems. Because your money problems aren't just your money problems, they're your family's problems. And nobody's saving you.
And these people are not coming to save you. Like, they still won't even admit there's a problem. So don't think that anybody's coming to save you.
I don't mean to be rude or offend you, but I don't care about offending you. I care about you saving your financial future. If that offends you, go somewhere else. You have the freedom to not be on this live. And by all means, I don't need you here. Stephen doesn't need you here. We want to talk to people that want to make a difference and change their financial futures. So if that's not you, bye. That's a simple thing. Cash doesn't give a shit if you're here. And I don't mean to be rude about it, but like, let's take us out of the equation. Take Chris and Stephen out of the equation. Do you have kids? Do you have young ones at home? I have a 2-year-old. Nothing that I do in my life is done if it doesn't impact her and her future. And you know what? I've grown up 44 years, soon to be 45 years, in a country that, yes, has some problems, but does provide freedoms and a lifestyle not seen in any other country on this earth. And I intend to make sure that to my power that I can as one person or as a community, I intend to try to maintain that level of freedom for my daughter. And I'm going to teach my daughter how money works, not the bullshit lies. I'm going to teach her not to watch the news. I'm going to teach her how to learn the laws of wealth and how to follow them. And I'm not just making it all about money, but you know what? Who said that, Stephen? There was that statement about, money's not everything, but it's pretty close to the same as air. I can't remember who said that, but like that's what makes things move. It's a tool. It's the shovel in the garage when you want to make that beautiful garden. If you don't have the shovel, you're fucked. You're not making a garden. Anyone ever made a garden by digging with your hands? Go out there and dig in hard soil, sun-baked Arizona soil, and let me know how long and how much that hurts to dig in the soil. You'd be begging for a shovel. That shovel is money. And when you have money and you control your money, you can help an awful lot of people. But start with your kids, because that's our future. What we do will be gone. Okay? It doesn't matter. Our kids do, though. So if we don't start instilling some values in them, start helping them understand the cost of freedom and what what is on the chopping block, it's all over, folks. Move to Ukraine or Russia or move to Ukraine and see what's going on with those people, because they had freedom and it's being challenged. Our freedom's being challenged too. And the only thing that's going to change that a little bit for you is your values. What do you value? And getting control of your money, because that will certainly make it so that you have the power and the ability to do the things that many others don't. So get control of your money. So that you want to know what our agenda is? That's it. To help you solve your money problems by helping you get back control of your money, which you do not have control of now because you're listening to people like Yellen in the Fed thinking that they're actually there to help you. Somebody said earlier, like, the elites have a different agenda and it's not favoring you. So I don't know, Stephen, what else do we got? We've ranted a lot about things. We had a lot of stuff.
Yeah.
I mean, Airbnb restrictions. Gosh, we got so much stuff on here.
Well, there's so many, there's so much government overreach. So we have like the Airbnb restrictions going all across cities across the country, where these local governments are stepping in and saying you can only own 1 or 2 Airbnbs. One of them has to be your primary residence. This is happening in Atlanta, Georgia, and Columbia, South Carolina, all across the country. And so, you look at that kind of thing. Then you look at, increase in taxes and all this other stuff and all these restrictions they put on us. I mean, I just saw this. Let me just share one more thing, and I'll tell you what my point is with all this. But I just saw this. The Biden administration unveiled a plan to mandate the removal of nearly all nicotine from cigarettes, a plan to upend the $95 billion cigarette industry, which probably is a good idea. But who is it? How is it their right to tell you can't smoke a cigarette if you want? Like, I get if there's health problems involved and things like that, but there's just so much overreach. At the end of the day, you have to find ways to play the game. And that's the bottom line, because all it ends up becoming is a game. And if you know how to play the game, and that's what we do, we expose all the bullshit out there with this show. This one show each week that we do, What the F Happened, exposes this fucking garbage out there that happens to us every day, that's fighting against us to keep us down. 95% of people in this country are not going to retire the way that they want to. So all the stuff out there that's against us, and then everything else that we teach with all of our trainings, all of our other webinars, all of our coaching calls, everything we do is how to beat that game, how to beat them. And so what we do is we use strategies that are laws on the books that people just don't know about. So why do we do infinite banking? Why do we do the specially designed and engineered whole life policies? Because it allows us to store our wealth in a guaranteed place with growth, guaranteed growth, get tax-free growth, get tax-free money out of it, and get tax-free legacy built for our family down the road. Why do we put our money into self-directed retirement accounts? We're talking about at 1 o'clock because we're taking advantage of laws that give us tax-free growth on our money. So we're eliminating one of the biggest wealth killers, which is taxes. We do it with infinite banking, eliminate inflation when it's running hot. It doesn't matter because we're always moving our money. So that at the end of the day, that's why we do this show, to expose the bullshit and teach you how to beat it. Plain and simple.
I love that. I love that. So folks, listen, you're here for a reason. I appreciate all of you being here. So Stephen and I, my whole team, every one of us appreciate you being here, because we understand the value of time. It's the most valuable thing that you ever have, but please make good use of it. Stop sitting on the sidelines wondering, well, I don't know, stop listening to the gurus and the talking heads on the news. Like, they're not there to save your ass. You are. And again, take yourself out of the equation. Now, I know not everybody on here has kids, but I would have never understood this until I had a child. Like, when that child laughs and gives you a hug, just focus on that, but also realize that's a gift, one that you should want to protect. And money, not to come back to money, but that's what these shows are about. That's what we teach. that's the foundation. That's your shovel. So get yourself a big ass shovel and start digging deep, because you're going to need it. You're going to need lots of those shovels. And if you don't, well, hey, the government won't be there to save you, because Social Security will be gone. It will be bankrupt. Government policies and everything else will definitely either, number one, still be around, but you'll be paying for it dearly. Okay. And if you want to know what this all looks like, if we do lose freedom, well, look at China. Look at Russia. It's called communism. I mean, you probably have all heard about it. It's a big threat.
Look at Taiwan. You want to talk about
Taiwan,
what's next?
We could keep going on.
China's in the dumps right now. China financially is really hurting. So what are they going to do? They're taking a lead from Russia, and they're going to go after Taiwan. It's going to bring us in. That's what's coming up next, guys. Just be ready for it.
Yeah. I hate to say it, but I like when times get rough like this, governments go to war. War is a profit center for the Fed and for other governments around the country or around the world. And it's a scary, sad thought, but just sometimes don't discount that. What he just said about China and Taiwan, like you got to really look at what's going on out there in the noise. You're not going to see it in the news. The news is only going to paint their agenda. And you always got to look at who owns the news stations. And it's not where you should get the news. I mean, yeah, we go on and we pull articles from it because you can find little bits and pieces, but you then you got to pull the curtain back, and you really got to look at what's going on. And that's what I urge all of you to do. We'll help you get there on the money side. We can't solve all your problems. We certainly can help you solve your money problems. And the best thing is you're here for free. You didn't have to pay us for this. So if you don't like it, just leave. You don't have, there's no refund that needs to be done. There's no bitching and moaning. You're in charge. You're in control. So now take control of your money. That's what we'll help you do. So join us today at 1 o'clock, 1 p.m. Eastern. Go to chrisnaugle.com and register for the webinar. We'll teach you how to be your own bank using your qualified retirement funds. Okay, your IRAs, your old 401ks, your old 403bs, those old TSPs, whatever you have, whatever you put your retirement dollars in, we'll show you how to take back control of that money today. And if you really want to deep dive, join us live, or you can do virtual if you want, for the 3-day event. Okay, and that is coming up July 29th for the VIPs, 30th and 31st. We still have seats left. The time's running out. So it's your choice, folks. We're happy you're here, and we hope to see you this afternoon. If not, we'll see you next week. Same great time, same great place for What the F Happened. Stephen, thank you for your time today.
Thank you. See you guys next week.
Bye, everybody.